Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
It's said to be a quieter week on the economic calendar, but that doesn't mean that there's no news to keep an eye on. Here's what you need to know this week. On Friday, the Fed's favorite measure of inflation, the core PCE price index, will be released. It accelerated in January, adding to concerns over the prospect of a more hawkish Fed. But that's not all. Consumer confidence data for March is due out on Tuesday and is likely to show the impact of stress in the financial system. Other reports include data on pending home sales, revised GDP, and initial jobless claims. The Eurozone will also release closely watched inflation data on Friday. While headline inflation is expected to slow, the underlying rate of inflation, which strips out volatile elements, is expected to accelerate. Keep an eye on this one. And here's something exciting. Don't miss a chance to win a limited edition branded mug. Simply like this video and comment the answer to the following question. In a floating system, what determines the exchange rate? A. Currency pegs. B. Supply and demand. Or C. The President of the USA. Please ensure you are subscribed to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar was firm this morning while the yen hovered near its 7-week peak as traders assessed moves made by authorities and regulators to rein in worries over the global banking system. Now let's take a closer look at the analysis for today on Euro USD. This currency pair is currently trading in a bearish flag pattern. If the flag pattern is broken to the downside, we could see this specific pair go back to retest those lower support levels at 1.073. Should that support level be broken, then we could see a further sell-off back down to the next support level. However, if momentum shifts and we get a close around that 1.08 level, we could see this currency pair rally all the way back up to that resistance at 1.09. Moving on to Wall Street. US stock futures were trading higher this morning after major benchmark averages capped a positive week amid ongoing banking turmoil. Across the pond, the mood remained jittery after shares in Deutsche Bank fell 8.5% on Friday, and the cost of insuring its bonds against the risk of default jumped sharply, along with the credit default swaps of many other banks. The current level of credit default swaps for European banks is just a little lower than it was during the height of the European financial crisis in 2013. Let's shift our focus to the S&P 500 analysis. This index is still trading in that ascending channel formation, and we are currently just below that primary resistance level at 4,000. Should we remain around this level and get a close around that 3,980 level, we could see this index sell all the way back down to the bottom of the channel at around 3,930. However, should this resistance level be broken and we get a close around that 4,015 level, we could see a rally all the way to the top of the channel at 4,050. Moving on to commodities. Oil prices kept to a tight range in Asian trade this morning, hovering just above a 15-month low as markets waited for the next shoe to drop in a potential banking crisis. Concerns over increased geopolitical tension also kept investors wary of crude after Russian President Vladimir Putin said he will station tactical nuclear weapons in Belarus, escalating tension with NATO over Ukraine. The bloc criticized Russia's moves. While oil prices recovered a measure of recent losses last week, they were still close to 15-month lows as markets feared that an economic slowdown will erode crude demand this year. Both Brent and crude rose between 2 and 4% last week. Looking at our analysis on crude oil, crude is currently hovering just above that dynamic support level. Should we get a close around that $69.90 a barrel, we could see a potential rally all the way back to that next resistance at $72 a barrel. However, should we get a close around that $67.30 a barrel, we could see a further sell-off on this specific commodity. Finally, gold prices retreated this morning as traders locked in profits after a strong run of gains, but remained near key levels hit last week as fears of a global banking crisis kept safe haven demand high. Bullion prices surged to over 2,000 last week, amid concerns over the next domino to fall amongst the US and European banks, with the yellow metal largely outpacing the dollar as a safe haven asset this year. Taking a look at our analysis on gold, the yellow metal is currently just above that diagonal support level at 1972. Should we break this support level and get a close around that 1969 level, we could see a sell-off all the way back down to our primary support at 1950. Should this diagonal support level, however, be respected and we get a close around that 1981 level, we could see a rally all the way back up to 2000 and potentially even 2020.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.